Alex Cole, my dear friend, the final day of March 2022, the end of Q1. How are you doing this morning, my friend?
Yeah, doing very well. How time flies. I mean, I feel like we just started 2022, didn't we? What
Yeah,
happened?
it's already a quarter of the way done. You know,
Yeah, yeah.
we're cruising through this year. Nothing simple about trading and running money in 2022. But why don't we dive into the charts from
Yeah.
GoNoGo charts and find out what's happening from a trend perspective on an absolute basis across all of the asset classes. Tell us what we're seeing here, Alex.
Absolutely. So we've got the asset map up here. And as you guys know, I'm sure by now we've got equities in the top panel, Treasury bond prices in the second panel, commodities represented by the US Commodity Index in the third, the dollar in the fourth, and Bitcoin down at the bottom. And the colors, of course, go from the strong purple as a no-go condition through to pink, amber, and then into the blue and aqua of the go conditions, with bright blue being the strongest. And what we see is that we are moving and have moved really back into a risk-on type of environment where equities have emerged out of their no-go. We see the S&P in the top panel painting bright blue bars. Treasury prices have weakened a little bit in their no-go trend, painting pink bars. Commodities remain in a go trend. The dollar remains in its go trend, both weakening a little bit. And Bitcoin, we'll keep an eye on Bitcoin as it seems to be breaking out a little bit and painting a string of strong blue bars down in that bottom panel.
Absolutely. So, for anybody who's new to this weekly Go No Go show here on Stock Charts TV, what we're looking at is technical analysis, but in a blended composite indicator. So, those colors represent a ton of information that we would normally see on a price chart as a lot of different lines. We could be looking at moving averages and observations of trend and parabolic SAR, you name it. But what we found is that the more clutter we have on the charts, the easier it is to fall into analysis paralysis or to let our behavioral biases take over. If you put enough lines on a chart, Alex, you can make it say whatever you want it to say. So we want to simplify that process without losing any of that comprehensive information. So these colors are generated off of a ton of computation happening in the back end. So we can see those absolute trends across the asset classes telling us that we're in a risk-on environment. We've got trends to the upside in both equities, commodities, the U.S. dollar, as well as cryptocurrencies. Obviously, bonds being the laggard on this panel. Alex, let's switch over and dive into the price chart itself. Let's look at a little price action for the S&P 500. As we entered that fresh go trend, sending out some research to our institutional subscribers. What are we seeing? How's that playing out so far this week?
Well, we saw the strong rally off the last intermediate low, which took us through those amber go fish bars into the weak aqua when we identified the go trend, and then into strong blue bars. Now, the last 2 or 3 days, we've seen a little consolidation here, but at the moment, we're consolidating above just these prior highs that we see over here that we saw sort of in February of earlier this year. This is a really congested area, as you can see on the left. And as you can see here, these highs where there was a lot of supply and demand. And there's a real battle here at this point with who could try to take control of direction of price. But we are in a strong go trend. If we can stay above these levels and set a new low, then that will be a good sign for the go trend that is in place.
Yeah, Alex, I spent most of yesterday evening recording the latest episode for the CMT Association's podcast, Fill the Gap. And our guest this month is JC Peretz, an analyst that I've known as a friend and also as a just incredible technician. And we talked a lot about this idea of support and resistance, why it's so important for technicians to understand these horizontal levels, horizontal being perhaps even more important than directional trend lines.
Yeah.
But can you talk to us just for a second about this idea of polarity?
Yeah.
You talked about the former highs there and those pink bars from late January and early February. What's happening from a behavioral standpoint as investors come back to those levels, and what do we mean by polarity?
Yeah, so polarity is a really important concept in technical analysis, and one that I think you can really place a lot of value in when looking at charts. And it's the idea that what once was resistance becomes support once broken, or if it's the other way around, what once was support becomes resistance if broken. And it's because we anchor to recent history. And as human beings, our brains, we can't really get away from things that we notice happening in the past. And so these levels here, which were highs for this no-go trend, where sellers overwhelmed buyers at these points, driving price down. Now, once we've broken above those levels, if we can consolidate above those levels, then that level will then become support, as it becomes a level that we can look to as a place where we can now, for the first time, find value in that level rather than seeing resistance as we did here over on the chart.
Absolutely. We saw that it was resistance in late December before that penultimate high, before the choppiness and the volatility and the no-go trends of 2022. Thanks so much for that lesson, Alex.
Yeah.
Let's dive under the hood of the index. Let's look at the sectors, not just on an absolute basis, but on a relative basis against their benchmark. So if we look at a go-no-go rel map of the S&P sectors, we can see those trends on the ratio of each sector to the index as a whole. And so we can find out what's leading and what's lagging in the S&P 500. What are you
Yeah.
seeing on this chart here, Alex?
Yeah, it's been a very interesting week here when you look at things from a relative perspective as well, because for the longest time now, we've been saying how the value has been, well, sorry, the value has been in the value sectors. It's a terrible way to say it, but the rotation has been away from growth into value. And so for a while now, we've seen no-go trends up here in technology, discretionary communications, and the go trends in things like energy and industrials and healthcare. But this week, we're seeing a bit of a crack in that idea. We've seen technology painting several amber go fish bars in that top panel on a relative basis, remember, to the S&P. And then right below that, we see discretionary painting an aqua go bar, while the communications sector weakens to pink bars. So this is a sort of an interesting time here, as perhaps this aligns with the movement to risk on that we were just talking about from an asset class perspective.
Absolutely. So the S&P 500 moving upward, when we're looking at these on a relative basis, it's the rate of change for this sector against that benchmark. So what we're seeing in consumer discretionary is that trend is higher than the index as a whole, relative outperformance. Interesting to see financials just in that hard no-go, good value play through the beginning part of 2022, clearly rolling over. But Alex, let's turn away from the sectors and let's look at the oil trade that we've talked so much about over the last few months.
Yeah.
And if we dive into USO, let's just see what's happening. Yesterday we saw a fresh rally in crude oil futures, another 3.5% higher. Is this trade over, or are we just continuing in trend?
Well, we knew the answer to that question, Tyler. But from a purely objective technical standpoint, the go trend is in place, but painting weaker aqua bars. And this sideways consolidation in price since the high that we saw, sort of highlighted by this counter trend correction arrow, has caused our oscillator to fall to the zero line. And with the exception of these two little blips, where it gave us these trend continuation icons, the oscillator has largely stayed at the zero level, showing us that momentum is really neutral, and there isn't much directional pull from a momentum standpoint, either up or down. And so as price is consolidating sideways, the oscillator is staying at the zero line, and we will look to see if this can ultimately provide support. And if the oscillator can get significantly off the zero line, then we would expect the go trend to continue and attack this prior high, perhaps setting a new one. So the trend is in place. The oscillator is finding support at the zero line, but hasn't been able to really rally off the zero into positive territory. And so we're still meandering sort of sideways here. But until we see a clear break below zero or a color change to no-go or amber colors, then we can say that the weight of the evidence suggests that the go trend is in place, albeit weakening, while we look for support here on the oscillator.
Absolutely. Being a human being, I can't help but notice headlines, and certainly there's been a ton of attention paid to oil reserves in the U.S. potentially being released. There's a lot of narrative going around, and so on this shorter term chart, we're seeing that battle between bulls and bears, not a clear directional momentum. But Alex, if we jumped back to a weekly chart, let's say, and look at the longer term trend. Obviously, oil going negative in the grip of the
Yeah,
pandemic sell-off
yeah,
in 2020. This is perhaps a longer term thematic piece to be looking at
yeah,
in an inflationary environment, and seeing the price of oil back up above $100 a barrel. Certainly, we don't want to be impatient investors, thinking that perhaps we've already missed the energy trend. This could have legs for many months and quarters to come.
yeah,
Um, from the weekly perspective, and if you could just tell us a little bit more about what's happening with the oscillator changing from green to blue,
yeah.
and what we're seeing in terms of momentum for this on the longer term perspective.
Yeah, I mean, as you said, so appropriately, we all listen to the news and we can't help it. That's why we need technical analysis to keep us sort of centered and focused on price.
Yeah.
And there's that argument at the moment. There are certainly clear drivers that are causing the prices of oil to soar based on the geopolitical events that are happening around the world, and other things. But
Mhm.
there's also the idea that in the short term, if we increase supply, then oil prices might come down. So there's sort of in the short term, we may well see those daily prices fluctuate quite a bit, and we may even see a correction that takes prices into a no-go. The weekly chart, some might argue, is more driven by these larger drivers of the asset that we're talking about. And on the weekly chart, we see that the trend is a very strong go trend, and the daily volatility is really just looking like a relatively small correction against the upward movement in price. Referring to the oscillator, you can see that we did find support along this trend. We find support at the zero line, and we're now approaching zero again. So it's quite possible that the daily will break through zero, go no go, but the weekly could find support here. And then, of course, if there's enough fundamental driver of the price of oil higher, then the weekly might find support, and we'll see oil go higher in the long term. The color change that you mentioned in the oscillator is telling us that volume is changing. As it goes to the dark blue, then that's heavy volume compared to a historical average. When it's lighter, then it's lighter volume. So there's a lot of volume going on right now, a lot of trading going on. That makes sense given the sort of where the oil discussion is in the forefront, really, of what's going on around the world and in terms of the economic environment.
Absolutely. And so go charts, we're not here to tell you the time frame or the risk appetite you need to be taking. Everybody's trade decisions are their own, but certainly having an objective view and an open mind to what could be a very long-term trend has been very helpful to patient trend following investors long before Alex and I came along. Well, let's stick with this commodities discussion a little bit. Let's turn our attention away from oil and look at the mining and minerals sector. When we had that asset class up, we said commodities as a whole were really driving higher. Why don't we take a look at something like silver and the precious metals trade that went out to all of our subscribers on Monday morning? What were you seeing in the silver chart, Alex, that spells some go trend conditions?
Yeah, so this was a very interesting one, and like you said, we are in the business of reacting to what we see, and it hasn't done exactly as perhaps some might have thought, right? So we were looking at this on Monday and seeing this really long squeeze buildup with the oscillator at zero, the trend in place, painting weaker aqua bars, and I believe that the Monday was actually the day where it broke slightly out of the squeeze into negative territory. So
Mhm.
I would be, all else being equal, would have expected the oscillator break into positive territory, the squeeze be broken to the upside if this go trend is healthy. Now, what is kind of interesting to note is then the following day we had this really strong rally from a much lower open, and now the oscillator is back at zero. So we're almost unchanged after lots of activity. We're almost
Mhm.
unchanged. Go trend painting aqua bars still just about in place, and the oscillator at zero. So for us to see a real continued surge in this Go trend, we would like to see the oscillator get above zero.
Absolutely. And that go no go squeeze, those orange grids, those are building up as go no go oscillator rides the zero line, letting us know that there's that tug of war between buyers and sellers. We don't have clear supply and demand, and we know from things like Keltner bands and Bollinger bands that a break out of a volatility squeeze can bring about very sharp moves. Interesting to see us right back at the zero line. Potentially from failed moves come fast moves. So let's keep an eye on that silver
Yeah.
chart. But let's take a look at another big mining operation, Rio Tinto, world's second largest mining company globally, and certainly taking part in this long-term commodities trade to the upside. President Kennedy told us a rising tide lifts all ships, and certainly the mining companies themselves are a great equity play for that thesis that commodities could grind higher.
Yeah, and this has been a company that we featured several times, given the rotation that we were talking about, and that sort of the idea of the commodity super cycle that sort of took hold at the beginning of the year. Rio Tinto has been a solid performer from a trend perspective, really since the end of 2021, and we've highlighted it along the way as it's found support at the zero line and moved higher. And then what we were looking at on Monday was having a couple of amber bars, but not going to a no-go and then reestablishing the go trend. What we were talking about on Monday was how we were coming right up against resistance from this prior high, and we were wondering if it could indeed break above that. And it does look like it has. So that's interesting, with silver sort of flatlining by the end of the week, but the world's second largest mining company managing to break above prior highs. That's a good sign, certainly for Rio.
Absolutely, Alex. And we'll be looking to see that oscillator stay in positive territory as the trend continues. From your perspective, if we just turn over to let's look at FCX, Freeport-McMoRan, because we've talked a little bit about precious metals, the industrial metals, and in particular copper, showing a lot of strength. What do you see here on this chart that might be confirming to what you were looking at with Rio?
Yeah, absolutely. A very similar looking thing. We're in a go trend, was able to find enough support here in these amber go fish bars, support at the zero on the oscillator to reestablish the go trend. And then a series of higher highs and higher lows, really taking us now to where we are, which is another slightly higher high. And confirmation on the oscillator. What we like to see also is confirmation, not divergence. So divergence is a very important concept. And sometimes you'll see a higher high in price, but a lower high in the oscillator. And this is quite a nice one to see, because we're getting a higher high in price and a comparable high on the oscillator, which is what you might be looking for. We came back a few days earlier in the week, but now back into strong go bars. Oscillator approached zero, but stayed in positive territory. So a good looking chart for, like you said, the industrial minings in a company such as Freeport-McMoRan as well. We've got higher highs and higher lows, and the go trend sort of really now in place.
Fantastic. Yeah, thank you for that, Alex. And let's turn our attention back to what we were discussing in the sector rel map. A lot of folks looking for a return to trades that worked really well for them throughout 2020 and even into early 2021. The debate being whether growth equities are returning to their prior dominance, or if this is perhaps a mean reversion trade. So why don't we pull up a chart just of the XLK, the technology sector of the S&P 500, obviously coming out of no-go colors into a go trend just last week. What are you seeing in terms of the trend perspective for technology stocks?
Yeah, so I mean, in order to advocate for that growth trade returning, you've got to see a sector such as technology breaking out of that no-go trend that it was in. And the only thing that is interesting to note to me, this is a really clean chart, very similar to the S&P chart that we showed at the beginning. A couple of things, though, to point out here. One, that we did just talk about that divergence idea, and we saw that divergence on the oscillator making higher lows, whereas the price making lower lows. So that was fairly positive. We also can see a break above this downward sloping trend as the go-no-go trend struggled to maintain the no-go colors and painted a couple of amber go fish bars before it got into the go trend. And that happens, of course, after the oscillator leads by breaking above the zero line. And then right now we are in a go trend painting stronger blue bars. One thing that I would note here, though, is that we actually failed, it looks like, at prior resistance. So while that rally in the technology sector was enough on the relative map to show it turning to amber bars, it hasn't exceeded on a pure price basis what the S&P has been able to done, which is just about get above that prior resistance. And if you follow this level across back to the chart, you can really see that concept of polarity playing out, where you've got support over here towards the end of the uptrend, followed by support again here as it retests, as it goes into a no-go, then resistance, resistance, and now resistance again. So we would like to see price get above this level, the level that was the high during that no-go portion of the chart, to be sort of somewhat confident that prices can move higher.
Absolutely. So what we're talking about, and just to summarize the last few charts that we've looked through, we're seeing these commodities trends both in energy, mining, and minerals. We've talked several weeks about DBA and diversified agricultural ETFs. Our good friend Jerry Parker was discussing for TD Ameritrade yesterday the cotton trade and some of the volatility in prices there to the upside. But what we're seeing from the growth sector is perhaps an interesting mean reversion trade if you're into shorter term timeframes. Alex, if you just switch this XLK chart to a 60-minute, we can see that the rally over the last couple of weeks has been a great trend if you're looking at shorter term timeframes to capture that go, maybe even size up or re-enter at those go trend continuations. But let's look at this from the macro view, as a lot of analysts are seeing. If we just compare the Russell 1000 growth over value, just using those two ETFs, let's pull up IWF over IWD. And what we're looking for here on a relative basis is growth outperforming value again. Obviously, a strong underperformance so far in 2022. Alex, on this ratio chart, what are you seeing there on the far right side in the emergence of this new go trend?
Yeah, and this is where so many people can start, or should start, or so many people do start when you're looking at, okay, how do I position myself in terms of the trade itself, the growth versus value trade. And so we can see clearly here that towards the end of last year, mid-December, we can see the no-go trend happening here, meaning that value started to outperform growth. Or if you think about it from the perspective of this chart, growth starting to underperform, going to a no-go trend on a relative basis to value. And then, but here on the far right, just as you'd expect and just as you'd hope the go-no-go charts would perform in the same way you would always be looking at them, is as this no-go was in effect, we can see the oscillator bumping up against the zero and continuing to find resistance for as long as the no-go trend is healthy. Then you see the oscillator come up against zero again, and this time, some bullish divergence to boot. And then the oscillator breaks into positive territories, telling us, hey, that's a bit of a concern for the no-go trend. So a bit of the first sort of time we might be thinking perhaps this ratio is reversing or changing its character a little bit. And then, of course, you get the follow-through with the go-no-go trend indicator painting a few aqua go bars, meaning that on a relative basis now, the growth starting to outperform value over the last couple of days.
Fantastic. And so when we see that that reversion, where we see growth equities outperforming value on a trend perspective, we want to look for leadership even within that growth sector. So we want to look for the really strong names. Let's pull up a chart of Amazon here as we come to the end of today's show. For those who are looking for some exposure, keep a toehold. We want to buy both relative and absolute strength. Talk to us a little bit about Amazon.
Yeah, so that was out of Monday. We just noticed this fresh go in Amazon. And again, Amazon looking slightly stronger than the technology sector chart. So looking for leadership amongst that outperformance that we're seeing from the growth names, you can see that bit like the SPY, Amazon has got above these resistance levels from earlier in the chart. And so we'd be looking to see price consolidate here and perhaps move higher. Now, what a nice setup would be as price moves sideways, oscillator falls to zero. And then when we get that bounce or that rally off zero, we'd get a go trend continuation icon here. Might be a nice point to enter if you're looking to take advantage of that rotation back into growth through a company such as Amazon.
Excellent, Alex. As always, the objective, the quantifiable, the disciplined weight of the evidence approach is really, really helpful as we think about portfolio allocations and managing our trade risk. Here we go, entering into April. Just wanted to say, looking forward to a busy week with you next week. Both you and I, pretty passionate about education in technical analysis. And so we've got a couple opportunities, correct, Alex, with the Wealth 365 Summit. When are we presenting again?
Yeah, we're going to be presenting at the Wealth 365 Summit twice, I think, for Monday and Wednesday in the afternoon. Just talking about what we talk about on this show, how trend following investors and institutional investors can benefit from a weight of the evidence blended approach using a visual like GoNoGo charts to better understand what's always a complicated environment.
Absolutely. So for those of you who are enjoying this GoNoGo show, come spend a couple hours with Alex and I next week. We'll be talking about relative strength. We'll be talking about momentum, concepts in trend following investment strategies. Monday afternoon and Wednesday afternoon at 3 p.m. You can look that up at Wealth 365 Summit. We're looking forward to seeing you next week again, Alex. And thanks so much for your time today. Be safe.
Sir, absolutely.
Talk to you soon.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.